Alright, so guys, in this video I will give you one of the best strategies I discovered by studying one of the biggest traders in the market. This trader used two simple indicators. It's simple, he's following a specific strategy with simple rules. This is helping him detect small changes like 1%, like 0.5%, 30% changes, and with the 100x leverage he's turning this into 100% and 50% profits and more. Using his strategy, I opened exactly 100 trades and 95 of them was successful. So the winning rate of this strategy is 95%. There is some wrong signals, but if you are disciplined and you stick to the rules of the strategy, you can make a lot of profit out of it. The first indicator he used is called Trend Lines with Breaks by Lux Algo. So you click on indicators, you go here, and you write trend lines. We choose this one, trend lines with breaks with Lux Algo. This indicator creates trend lines, and whenever a breakout is created, it will be highlighted by the indicator. So for example, if there is an end for the downtrend, a breakout will be highlighted. So either we will see a red B or a green B. A green B means that there is possible uptrend coming, and the red B of course means that we are expecting a downtrend. So whenever you see the red B, this means it's time for a short position. Here, red B, you can short or sell, depending on what you like to call it. And whenever you see green B, this means it's time for a long position. But trust me, you could lose your money if you follow this indicator alone. Sometimes it's working, but most of the times it will give you wrong signals. So as you can see here, the indicator is creating trend lines. So this one is a downtrend line. As you can see, the direction is going down, and this one here is an uptrend line. So whenever the market is breaking out the trend, it's creating this highlighted break. Another example here, the indicator created the downtrend line. The market, as you can see, broke the trend, and the indicator, as you can see, created a green highlight indicating the end of the downtrend. So this trader is using this indicator as one of the two indicators his trades are based on. Same thing, the indicator is creating this high as a pivot point to create this line with a slope indicating the direction of the market. Here the market is crossing this line and the indicator is highlighting a breakout from the downtrend. In the same period, the indicator created another red line indicating an uptrend, and when the market crossed this line, another breakout was highlighted by the indicator. I kept tweaking the parameters of the indicator. I tested different values and I found that the best value, if you are using the 1 minute candlestick chart, is to keep the length at 14 but change the slope to 1.3. The second indicator used in this strategy is called Auto Trend Line with Alert by Taurus. The length of the auto trend line should be 40 and we'll keep the offset at 3. This indicator will also create trend lines, and whenever there is a break, it will tell you either to short or to long. So as you can see here, this dotted line was indicating a downtrend. It was broken here, a long signal was created indicating that you can buy here. So as you can see, after that immediately a big uptrend was taking place. Same thing, this dotted line indicating an uptrend was broken here, a short signal was created and then a downtrend took place. So this indicator told you to short here. So the strategy is basically like this. First, we look for the signals from the auto trend lines, meaning we look for the signal saying short or saying long. And after that, we wait for the appearance of the breakouts and we open the trade if only the two indicators are saying the same thing. And of course, the first one must be the auto trend line and the second one must be the trend line with breaks. For example, in this case, this is wrong, we will not enter the trade here. Why? Because the first indicator is telling us to short, but the second one is telling us to long. So this is wrong and we will not open a trade here. We will only short if we have the red B after a short signal, and we will only long if we have a green B after a long signal. Also, this signal is wrong. Why? Because the first indicator is telling us to short, but the second indicator is giving us a green B, meaning you should long, and we should avoid this. The exact signal should be looking like this. The first one is telling us to long, the second one is telling us to long, and after that we can see this clear uptrend. Alright, this uptrend is looking like nothing, it's small, but if we measure it, this is only 0.41%, but remember, if we are opening the trade with 100x leverage, this is 41% profit. Alright, let me just give you another example. Here, this is perfect. The first indicator is telling us to long, the second one is giving us a green B, and we should long here. As you can see, immediately after the green B, we had an uptrend with 0.70%. Let's look for another signal. As you can see here, the first indicator is telling us to long, but the second one is giving us a red B, meaning it's telling us to short, so this is wrong. Alright, let's go back and let's look for another signal. Alright, this one. This one is telling us to short. We will wait for the second indicator until we see the red B appearing, and that's where we short. As you can see here, we had a perfect downtrend and we could make up to 57%. Alright, now let me give you an advice about this strategy. Whenever you see two signals from the same indicator, you should avoid it. You can open trades, sometimes it's working, but it's better if you avoid it. I call this signal sad face, so avoid sad face. As you can see, the indicator will create a sad face. Yeah, here, as you can see, we having another sad face. If you apply the rules here, you will have wrong signal and this will mislead you. So I don't advise you to follow the strategy if you see the sad face. Yeah, same thing here. We have in a sad face. So if you are following the rules of the strategy, this one is saying short, this one is also telling you to short, and according to the strategy, we are supposed to have a downtrend here, but as you can see, we having an uptrend. Why? Because we having a sad face previously. So my advice to you is to avoid sad faces. So basically what we are looking for is something like this. The first indicator is telling us to short. We wait for the second indicator. If the second indicator give us a red B, meaning this is the perfect moment to short. So I will short and I will make profit from all this downtrend. If we calculated, this was like 31%. Let's look for another signal. So for example, here. The first indicator is telling us to long. We will wait for the second indicator. It's giving us a green B, meaning it's asking us to long. So the rules of the strategy here are applied. What I'm going to do is I'm going to long and I will make around 48% profit. Another thing I want to mention, there is some cases where the strategy is unstable. So in this case, for example, as you can see, the first indicator is telling us to short, the second indicator is telling us to short, but immediately after that, the second indicator give us another signal telling us to long. So this is unstable, this is not clear, and this is something to avoid. Alright, another example. So for example here, the first indicator is telling us to long, as you can see, and the second indicator is giving us a green B, meaning it's telling us to long. So both indicators are telling us to long. So I'm going to long and I'm going to make profit from this uptrend. Here also, the first indicator is telling us to buy. The second indicator is also telling us to buy. I'm going to buy, and look, an uptrend appeared immediately after the second indicator. Yeah, another example here. The first indicator, as you can see, is telling us to short, giving us a red short. The second indicator is also telling us to short, is giving us a red B, meaning this is the perfect moment to short, and look, a long downtrend appeared. We could make a lot of money if we entered a short position after the second red B. So the strategy is as simple as that. You need to see a signal from the first indicator, and you also need to see a confirmation from the second indicator. Avoid sad faces and you will get signals that will get you profit. Here, as you can see, this is wrong. The rules are not applied. The first indicator is telling us to long, the second one is telling us to short, so this is misleading and you need to avoid it. We are looking for the cases where the two indicators are saying the same thing. Here, as you can see, the first two rules from the strategy are applied. The first indicator is telling us to short, the second indicator is telling us to short, but unfortunately we have in a sad phase, so we need to avoid it. Another example. Here, the first indicator is saying long, the second indicator is giving us a green B, meaning it's asking us to buy. So as you can see, immediately after that, we having a clear uptrend. Yeah, also here, the first indicator is asking us to buy, the second indicator is telling us to buy, and after that, we having another clear uptrend with 42% profit. Also here, as you can see, the first indicator is telling us to short, the second indicator is also telling us to short. After that, as you can see, we having a long downtrend. Also here, as you can see, the first indicator is telling us to short, we having the second indicator giving us a red B, meaning to short also, and we having a 266% downtrend. Also here, as you can see, the first indicator is telling us to long, the second indicator is telling us to long also, and we having a clear uptrend with more than 200% profit with 100x leverage. So if you like the video, please hit the like button and don't forget to subscribe. And remember, I'm not a financial advisor. This video is made for entertainment purposes only. This is not a financial advice.